In this video, we are going to be analysing Tilray, ticker TLRY. Now, to get straight into it, obviously we're sitting at $4. We closed up 7.5% on Friday. Now, this is why we're actually doing analysis on TLRY, because I saw a lot of people talking about why they're losing money on their call options, even though we closed up 7.5% today. And the real reason for this is volatility like this is expected on a stock like this, and options are really probably the most difficult product to trade on financial markets. You have bonds, you have futures and all of that, but really the options one has the most impacts kind of affecting it, which can make them the hardest to trade, especially if you don't understand them. And obviously you have things like delta, you have things like time decay, you have implied volatility. So all these things play a big factor on the price of an option. And Tilray, for example, if we pull down the longer term time frame, which is going to be the chart we do analysis on anyway, we had a $14 high down to $2.65. Again, a lot of the options are a lot of the firstly stocks that have these kind of moves, they don't always tend to have options, but in the rare case that they do, kind of like on Tilray, if they're doing that, there is a lot of volatility priced into them. So really, if you're looking to trade stocks like this, you're always going to be paying a big premium. But really, the only way, or kind of the best way to kind of trade these, is by getting in the money ones. If you're buying, say the stock's currently at $4, you think it's going to go higher, unless you're getting kind of a $5 strike or below, you're probably going to lose money on it. Because again, if it can't get in the money, your premium's just going to decay. That's one thing I just wanted to note if you're trading options on something like Tilray. But onto the proper analysis now. What levels are we paying attention to? So what is key is today we did actually break through our first deviation on the 6 month, but have come into our first deviation on the 1 year chart. Now if we go back to that intraday chart, we can see that was and what caught the peak of that day, and that's why looking at these deviations are so important, because again, this would have been a scale out location, or at least an area to move your stock, because we knew if we broke this level again, you want that retest again. We kind of got that on a 1 minute, not all that sufficient, probably not something I would have ever have traded. But if I was long for any reason or wanted to trade the stock short bias, this level would have been used for both. It would have been used for a target if I was long, but also used as a short location if I wanted to trade the stock short, or just reverse my position. If I'm long, trade it to the target and then look to flip it. That is what that level was used, and you can just see how accurate it was on the day. I mean, it provided great upside. You don't have to have big stops on these kind of trades. Provided you 12 cents to the downside, which was around 3% upside. But again, on these kind of trades, you maybe risk 30 cents up to 30 to the 31. So 6 cents, 7 cents on it. At the max, it still provided a 2 to 1, and again, that's still quite a wide stop on a stock like this. Really, if they don't tend to work right away, they don't work at all. So really, I usually have a stop around 27, 28, and then it provides about a 3 to 1 risk to reward. And again, it hasn't really come to test it. You could have maybe swung it, but again, that's all obviously got its own risk involved. But that's just fairly why those levels are so important to be paying attention to. But if we can actually break over this level, come back to test it as a support, and it can hold, then we have targets going on to 514, 640. 640 is going to be a key level. Second deviation on the 1 year. Also our third deviation on the 6 month chart. Definitely something I'd be paying attention to. If I was long, I would really be closing out all of my position near here, and it would definitely be something I would look to reverse, and I probably would even trade it myself short if we can come into that level. Now, if we break that, we do have final levels going to 765, 850, and 1070. Now onto the support side, what are we paying attention to? We have supports at 265 and 210, with final levels taking us all the way down to around $1.40 and 17 cents. Now some of these levels very far off. Do we need to pay attention to all of them? No. All you ever need to do is just pay attention to where we are now. We're sitting at 418. My main focus is on these two levels here. Can we break for 425? If so, we want to see that break above, come back to hold it as a support, and if it can hold, look to trade the move to 515. On the other hand, if we start pushing down, again, I'm not looking at anything on the 389 unless we break below it, come back to test as resistance and fail, then I would be expecting a move back to its statistical mean at around 265. See as well, that is that 52-week low. If we start to break here, you'll probably see a lot of stops trigger, and that's where you'll probably get a big move to the downside, and we would have a target at least of around 210 to the downside. Anyway, that is the breakdown on Tilray. I hope you enjoyed the video. If you did, why not drop a like and subscribe, and check out one of these two analysis videos.